Hello, everyone. Jeff Affronti with annuityexperts.com of FSD Financial Services. And today also we'll be displaying the SPIAquote.com domain that's completely devoted to immediate annuities. You know, immediate annuities are one of the most misunderstood and underused insurance products, even though they've been around forever, basically, a very long time. One of the biggest discreditors or talking points about the immediate is in the past has been that people say when you die, the insurance company keeps all your money. Well, that's true in one type of contract. Just like saying, I want a sports car, but sports cars are red. No, there's lots of different colors. Well, same here, there's lots of different products. So, yes, that can be true in that one type of life only annuity. However, there's many others that guarantee a gain from day one. And today I'll be discussing the period certain or term certain, same thing, immediate annuity. I will illustrate from a 1.3% guaranteed gain up to a 60% guaranteed gain from day one. So let's jump into it and see how all of this works. So let's go. The period certain immediate annuities, SPIAs, single premium immediate annuity is how they're known, term certain income, and we'll talk about tax exclusions as well. And again, the SPIAquote.com website. Okay, let's go. So here I did an illustration based on a $100,000 single premium and a monthly income starting immediately with a $100,000 cost basis. So that means all this money is already pre-taxed. It's like cash out of your bank and they're putting it in. It's already been taxed. And so we're putting this money in. So that's 100% cost basis, meaning the money that's in there is 100% been taxed already. So if you look, this particular illustration, I ran the entire stretch of terms from 2 years to 35 years. So let's just look at on a 2-year term, which is 24 months, the deposit of $100,000 will kick off a monthly income, $100,000 deposit right here, of $4,221 a month, giving you a total guaranteed return of 101,304 on your 100,000. So in 24 months, you made $1,000 while distributing at the same time. Here you go. We just keep going down the line. The 3 years here, you see, all the way down. Here are your interest rates that are being credited to these accounts. So you get 1.25% on the 1 year, the 3 through 9 years crediting 2 on this particular carrier. And anything above 10 years, you're getting a nice 3% IRR, internal rate of return on these products. Assuming that this is 100% cost basis like we're doing, there's an exclusion ratio, meaning a portion of these payments are free of tax. So I'll break into that into the next screen, but I just want to show you one really good thing here. On day one, a client who puts in $100,000 on this 35-year, let's show you here on this 35-year period certain right here, they get an income of $383 a month. Well, after the 35 years is over, you have $160,000 is guaranteed. So what we have is on this 160,000 that in under 22 years, your 100,000 has been returned. And the rest of the time, the 22nd year to the 35th year, it's all the insurance company's money. Even though you're still receiving the exclusion ratio on that money, it's all the insurance company's money. So let's go to the next page and talk a little bit about the way the interest rate calculates on this. So a lot of people say 1.25, 100,000, that's $1,200 a year. How come I'm only making $1,000 and I'm going in 2 years? Well, you got to realize that this is a decreasing premium, right? You're taking money every month out of this annuity. So let's look at here at the beginning, we have $100,000 right here. Let's assume the interest, I'll break it down on monthly equivalent yield interest, say about a dime you're getting. So that's about $100 on your $100,000. And then we're taking the payment of $42.21 and we have a remainder of about $95,000. So we do this all the way down the line for the full, what happened here? For the full term, let me get me out of the way so you can see here, that in the final 24th year, in the final 24th year here, we have 24th year, I'm coming up with a $53 after the interest. So what I did is a quick check of the $1,250 that I assume the interest, and we subtract the amount of money they actually receive. So I was about $53 off. But as you can see on the error on my side, so I'm coming up at $1,251. They're showing $1,300, right? That's what you're making on the account. So you can see as there's this decreasing amount of money, you earn less interest. So that's why you're not earning, $2,500 on your 100 grand at a 1.25 interest rate, because it's you're decreasing your money. So that's how they come up with the 1.25. It's an accurate rate for that money, and therefore, we assume the 3% is well accurate. That's what you would need while subtracting all that income every month. Now we're going to look at the exclusion ratio. So this particular annuity, 2-year, had a 98.7% tax exclusion ratio. What does that mean? Well, of this, here's your $4,000 at 98.7% equals $4,166 of that payment is not taxable. So we subtract that from the full amount, and that gives us a $5,487 that are taxable. So of each payment, $5,487 is taxable. So let's assume that person has a 25% tax bracket. Well, that would equal $13.72 of each payment is actual tax that you have to pay. So out of that $4,221 minus the tax, you get after-tax payment of about $4,207. $4,207 after tax. So that's really good, right? If you need to bring in some extra income, guaranteed, you don't want to worry about it. This is a way to do it and not increase your taxable earnings. Next page, we are going to talk about reasons for a period certain SPIA. These are reasons we've seen people use them, people buy them, all that good stuff. Okay, so we have temporary proof of income. This is something I've seen more recently, maybe in the last 10 years, that people are using this as a short-term way to prove income, whether they need it for whatever reasons, a loan, whatever they need. You can show, say, 24 months, 36 months. I think 36 months has been the primary one we've seen people use to show some type of guaranteed income. And they like that. Now, creditors like that for whatever reason. Another reason we've seen the use of the period certain over the life contingent is simply the life factor. There's no life contingency, no age basis to it, no gender basis to it. So the same pricing for every individual from age 5 to age 99, all the way up, I guess even younger, really. So it works for many ages and health levels. So if you're unhealthy, you don't want to buy a life annuity because it's life contingent, right? The whole idea there is longevity protection. Here we don't care about longevity. We got a set of terms and a set period of time. So you can go 30, 35 years if you want, if you just want to make sure you have a set payment without having to worry about the life contingent. Just remember, it will not pay for life. The funding of certain life insurance. So a 10-pay, if you have a 10-pay, you can put it into the immediate annuity. It's basically making 2 products instead of 1. Agents, it's 2 sales instead of 1. So the immediate annuity will go in to fund the life. So it's all set up in front, kind of avoid a mech situation, I guess. And you have this set up. So you put 100,000, let's say, into the immediate annuity. It'll kick off. So you can do them annually. You don't have to have monthly payments. We can do quarterly, anything you want, semi-annual. And you have that pay the life insurance. So you put it in day one. It's all planned and set up. They don't have to worry about funding this life insurance every year. Really good for that. I've seen it used for that. It's very good. There's no additional work. It's a set it and forget it, kind of like the life insurance aspect I was just talking about. It's all set. So for people who want to not spend a lot of time worrying about paying bills, or they're missing a life insurance payment, God forbid, you're 30 days out, you lose your insurance. So that's one of the reasons we have definitely seen people use it, for the simplicity and the ease. Child support payments, whether required by a divorce or something, or voluntary. Sometimes in these settlement options or these situations, there could be volatility. And this adds a little level of security for either side that's supposed to get the payments, as the money's there, it's going to be paid out, direct deposited. You don't have to call them for every month for the check or anything. So we've seen that used too in divorce settlements, for alimony type stuff. You can use it for any of that stuff. Maybe even help the deal get finalized because it's not dependent on the two parties cooperating. So we've seen that used. Charitable giving is, if you want to give to a charity every year a certain amount, you can put it into an immediate annuity, and each year you can have that paid out directly to the charities, or you can disperse it to any charity you want after the year, after you get the payment and stuff like that. So that's a good thing to do too. And it can continue, because these pay, if should anyone, God forbid, pass away during a 10-year term in the 5th year, it pays the whole 5 years. These certain annuities will pay the entire term, no matter who's alive. It could be the 10th beneficiary in the row. These things will pay to the point where they'll even pay the state if there's no beneficiaries. These things they will pay out 100% of the amount they guarantee. Reinsurance of payment promises. Let's say you have a guarantee you need to make to someone. Casinos can use this as if you win a lottery payment, a jackpot for 20 years, it's a way to reinsure. So basically the casino's off the bet and the insurance company's on it. So it's a way to fund it in advance, costs a little less. Not that they use it, they're usually self-funded, but it could be for anything in that regards, any type of contests or prizes, and it's all guaranteed that way and insured by a billion-dollar insurance company, right? We use these for business buyouts. One guy's buying a business from the other. He promises to pay 5 years of X amount of money, but he doesn't want to depend on anybody else. You want it all done in stone with irrevocable payees, maybe. Term Certain Immediate Annuity can do that all on a guaranteed basis on day one. So that's very good, and it gives everyone a bit of peace of mind that they're not dependent on another party. They have a large company they can deal with at any time. And that's about it for the basic reasons we use it, besides the actual just to get cash on a guaranteed basis. Most carriers offer the period certain that offer SPIAs. However, they don't offer the short-term 2 to 4 year. 5 years is usually the shortest you can find. 20 years is usually the longest. We do have them as short as 2, like 1 or 2 companies, and as long as 35 years with, again, like 1 or 2 companies. They do issue up to age 99, which is really great. You can do some pretty good planning. If you're older, have a lot of money, want to take care of great grandkids, you can get them into their 30s basically with a guaranteed income. So that's it. So for the reasons, I want to go ahead and run you through how to get an immediate annuity quote. So here you see we have a secure server, and we're going to go ahead and run this. I already did a pre-done video here. So we'll go ahead and get a quote. Click on the top there and get a quote, or simply request a quote right here. And when you pull up this form, put in much information as you can. It's mostly helpful to me to run the quote. Here's a good date. Put your date of birth in here. Make sure we have the gender. That's important for life contingent quotes. Your state of issue. Some states have premium taxes, will change the pricing. Not all products are approved in all states. Again, if you have a joint, you can enter the joint information here, male or female. Spouse matters for qualified money. Put your premium in, very important. If you want your first payment at a specific time, otherwise I run them for 30 days out. The type of funds, non-qualified, qualified. Here's your options: single life, joint life, temporary life, period certain. If there's any of these options you don't see here, just go ahead and scroll down a little bit longer. This is your COLA if you want a guaranteed increasing payment. Very important that I get your email if you want this quote. Otherwise, I can't get it to you. A phone number is great if I have any questions. It's not required. And in the comment section, if you need any specific besides a 30-year, if you want the 35 or a 2-year, go ahead and use that comment section right there. So, and if you do it right, you'll get this page. It'll say thank you, and we do thank you for your request. So that's the how to request an immediate annuity quote on my SPIAquote.com page, which I've kind of developed so that the quote form is really simple and has all those options. You don't really have to think through it. And if you have any other questions, you just give me a call. And that pretty much brings us to the end of the presentation here. And I want to thank you all for watching. And please be sure to follow us on Rumble, LinkedIn, YouTube, and Facebook. We're at Annuity Experts at Rumble. We are at my name, Jeff Affronti, on LinkedIn, or you can look at FSD Financial on our company page. On YouTube, I'm annuityexperts.com, DOT, spelt out, annuityexperts.com. And on Facebook, we're Annuity Experts, I believe, on Facebook too. So thank you all for watching, and if you have any questions on annuities at all, fixed, immediate, or index, please feel free to give us a call or shoot us an email. We're happy to do a video or just walk you through any illustrations or questions you have. Thanks again and have a great week.